Hey, let's stay on the fires in California. Bring in Jerry Howard. He's the president of the National Association of Home Builders. And Jerry, the question, of course, is these fires obviously going to require a tremendous amount of rebuilding. How expensive is that going to be?
Well, you're looking right now, first of all, the biggest expense is going to be time for these people. And by the way, obviously, like everyone else, our hearts and prayers go out to everyone. It's going to take time. Once the fires are contained and over with, there's going to have to be a lot of investigation that goes on from a gubernatorial or government level, and then it goes down from there to the insurance inspectors. Every individual homeowner has an individual insurance policy. They have to come in, they have to be inspected, and then the money has to be given out. Once the money's given out, they contract with a contractor. The contractor then has to hire laborers, get building materials. It's a long-term process, Charles, and it's very, very expensive. The expense is going to come in, as I mentioned, labor shortages. The expense in building materials are higher than they've been, and now mortgage rates are going back up. It's a triple whammy for these poor people.
Let's talk about the overall housing market and start with these mortgage rates. It looked like the housing market was showing signs of vulnerability before these rates went up, but certainly since they've gone up. You know, I guess there was a school of thought that thought the fence sitters would see that and leap into action, but that hasn't happened. Applications are down, rates are up, and the housing market seems to be in a lot of trouble.
I won't go so far as to say it's in a lot of trouble. I will say that we've revised our starts forecast down a little bit. We don't think we're going to make 900,000 units this year. We need to be making about 1 million to 1.2 million in a normal year. We are very concerned. We're getting hit at both ends. You got regulatory burdens, you've got land costs, you've got the issue of labor shortage, building material costs at the front end of the pipeline, and now you're going to charge the consumers more at the back end. It's a very, very touchy time. And unfortunately, we expect that the Fed's going to raise rates again twice next year.
I wanted to bring up just real quick, the Dow's off 404 points. You know, I've been talking about the Fed and the speech that was made on October 3rd that I think triggered this massive amount of selling in the stock market. How much should the Fed be listening to the housing market? What kind of cues should they be taking from what's happening in your industry?
Well, that's a great point, and we meet with them periodically, and we hope that they will listen to us right now and say, we want to tell them that we are treading in dangerous water right now. They need to take a pause, we think, look at the impact on the housing markets and the overall economy before raising rates again.
All right, it's always great talking to you, Jerry.
It's good to see you again.
Appreciate it.
Thank you.
Thank you very much.